USDA supply demand report came and went with less than normal volatility and fireworks in the grain markets than what we've become used to, especially after the acreage in grain stocks report a couple weeks ago. The trade apparently had factored in fairly well most of what USDA reported by the time we got to lunchtime in the Eastern time zone. The highlights of the report include the really no change in the U.S. corn yield of about 156.5. That was kind of a bullish surprise or friendly surprise to the trade, but that was countered by a slight increase in U.S. ending stocks for corn. 2013 bean carryover actually jumped 30 million bushels to 295 million. That was kind of a bearish surprise, I think, to the trade, and probably the most market moving and the most important to the trade, both in the short term and the medium term, was the fact that USDA lowered China's 2013 corn production by 1 million tons. They also increased their imports by 5 million tons, with us likely to get around 3 million of that increase. I think this is one of these things where the trade had been seeing that the central China flooding in key areas, wheat and corn producing areas, was impacting the trade. We saw the exports come across last week, and again this week. USDA essentially said on their report that these exports are going to continue because the damage is significant in central China. So between that and the ridge of high pressure still being showing up as a potential factor as we get into the weekend trade and early next week trade, the market didn't really want to deal with too much of the bearish side of the report and instead kept the trade fairly hot, fairly strong, with single-digit gains pretty much across the board. Technical support levels in the D's corn of 510 and November beans of 1272. Those were tested on a sharp sell-off right after the report, but they held, so there was no follow-through selling. That's it for today. This is Mike Zuzolo. Please remember, there is substantial risk of loss in trading futures and options. The impact of cycles or current events on prices may be already reflected in futures. Have a great day.